Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Dan Geiger, real estate reporter with Crane's New York Business. Welcome to the Knakal News Network. I'm here with Bob Knakal, chairman of Massey Knakal Realty Services, and in this segment we're going to be talking about the commercial sales market. 2012, a big year in sales. How did that compare to the first quarter? I know that there was an expected drop-off due to the capital gains tax. How did you see it? How did that pan out?
Well, Danny, the first quarter actually performed a lot better than we anticipated. I mean, clearly we had a very, very substantial volume in 2012, a lot of which was caused by the threat of capital gains tax increases. But I think it's interesting to look at how the roller coaster ride has progressed going back to the peak of the last cycle in 2007. In 2007, the market here in New York hit an all-time record of $62 billion of sales volume. But by 2009, sales volume dropped to $6.1 billion. That's about a 90% drop. Slowly but surely we've been regaining pace, and last year we finished the year with $41 billion in sales. And a lot of that $41 billion was created by the fact that folks were nervous that capital gains taxes were going to go up, and we naturally expected a drop-off in the first quarter of this year. But although we did have a drop-off, it wasn't nearly as severe as we had expected. The low interest rate environment really is something that's impacting value much more than volume. And we saw in 2012 about a 13% increase in the value of properties across the city, and we're projecting that value will rise by about 20% this year. But because we've had a reduction in the supply of properties that are available for sale, and we have the same number of buyers that are looking to buy with the same amount of capital, demand far exceeds supply, and that is exerting tremendous upward pressure on value.
How long can that last? Can the interest rate stay low?
Well, Danny, that's the big question on everybody's mind, is how long are these rates going to stay low? Clearly, it is the rocket fuel that is creating all the momentum in our marketplace. The Fed has come out and said that they intend on keeping rates low through 2015. There's a lot of question as to whether they actually can do that or not. We've gone through several rounds of quantitative easing, and the fact is that quantitative easing is nothing more than a form of price control. Price controls create distortions in markets. In fact, long periods of low interest rates actually create asset bubbles. So the question is, are we in a commercial real estate asset bubble?
Well, do you think that?
Well, I think there's a very good case to be made for that.
How do you see the rest of the year playing out? The second quarter, the third quarter, the fourth quarter of 2013?
Well, a lot of that is going to be dependent upon how the broader economy does. We're expecting maybe a little bit better second quarter, but the third and fourth quarters we expect to see activity pick up quite a bit.
Bob, in 2012, why weren't there more bigger office buildings sold?
I think the reason is that the office leasing market is probably the most susceptible to the broader economy of all of the fundamentals of commercial real estate. If we have GDP growth at less than 2%, people feel like we're in a recession, even if we're not technically in a recession.
Right.
And that trickled down to impact the office building market. If buyers think that they're unable to get significant growth rate year over year in rents, it's very difficult for them to plug the numbers into their models and come up with a compelling price that a seller would be willing to take. In conclusion, 2012 was an epic year for property sales in New York City. Thus far in 2013, volume is down, but still higher than expected. Values are continuing to rise and will as long as interest rates remain low. We expect that volume will continue to pick up as we progress into the year with a particularly strong third and fourth quarter.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.